Is China selling more electric cars to other countries even if fewer people are buying them there? And does it show that more people around the world want eco-friendly cars? In recent months, the landscape of China's EV industry has seen significant shifts, with domestic sales slowing down while exports soar to new heights. Let's explore the factors driving China's EV market in both domestic and international arenas. In the opening months of the current year, China's electric vehicle industry has encountered a significant alteration in its trajectory, marked by discernible signs of a deceleration in sales growth. Recent industry data, freshly released and meticulously analyzed, unveils a noteworthy trend. The sales of battery-powered electric vehicles in China surged by 18.2% from January to February. However, this figure stands in stark contrast to the robust growth rate of nearly 21% witnessed over the preceding year. This shift in growth dynamics of EV sales underscores a potential slowdown that warrants careful consideration and analysis. What drives China's continued demand for electric vehicles? While the dip in domestic sales growth is undoubtedly cause for concern, it's essential to contextualize this trend within the broader landscape of China's electric vehicle market. Despite the observed deceleration, the overall demand for electric cars remains undeniably substantial within the country. China has long been at the forefront of global efforts to promote the widespread adoption of electric vehicles. Driven by ambitious government policies, substantial incentives, and an increasing societal emphasis on environmental sustainability. This enduring demand underscores the fundamental shift towards cleaner and greener transportation solutions, positioning electric vehicles as integral components of China's broader strategy to mitigate environmental impact and reduce carbon emissions. Several factors may contribute to the observed slowdown in EV sales growth in China. Economic uncertainties, shifting consumer preferences, and alterations to government incentives could all potentially influence purchasing decisions within the market. Moreover, the maturation of the EV market may naturally lead to a tapering of growth rates as adoption levels reach saturation points in certain segments or regions. However, despite these temporary fluctuations, the long-term outlook for electric vehicles in China remains highly optimistic, buoyed by ongoing investments in infrastructure, continuous technological advancements, and evolving consumer attitudes towards sustainability. Despite the domestic slowdown, the export market for electric vehicles in China is experiencing a remarkable surge as the global demand for sustainable transportation solutions continues to rise. Chinese EV manufacturers are seizing the opportunity to expand their reach beyond domestic borders. This growth in export sales signifies a shift in focus for Chinese EV companies as they seek to capitalize on international markets to offset any domestic sales challenges. The increasing significance of the export market for Chinese electric vehicles highlights the industry's adaptability and resilience in the face of changing market dynamics. By tapping into the international demand, Chinese EV manufacturers can mitigate the impact of domestic sales fluctuations and maintain a steady growth trajectory. Furthermore, the expansion of China's electric vehicle exports contributes to the country's broader goal of becoming a global leader in clean energy and sustainable transportation technologies. In the highly competitive landscape of the Chinese electric vehicle industry, major brands are embroiled in a fierce price war as they vie for the market dominance. At the forefront of this battle is BYD, renowned as the world's largest EV seller, which has initiated a bold strategy of slashing prices across a wide array of models. With a significant reduction of 17%, BYD's aggressive pricing tactics are aimed at safeguarding its market share in the face of intensifying competition from both domestic and international rivals. The decision by BYD to lower prices reflects the company's strategic response to the increasingly saturated EV market in China. In a bid to maintain its competitive edge and appeal to price-conscious consumers, BYD has opted to sacrifice profit margins in favor of bolstering sales volume. By making its EVs more accessible and affordable, BYD aims to solidify its position as a forerunner in the Chinese EV market while simultaneously fending off challenges from emerging competitors. However, BYD is not alone in its pursuit of market supremacy through aggressive pricing strategies. Local rivals such as G and Zong have swiftly followed suit, while also entering the fray with substantial discounts and promotional offers, in a bid to lure customers away from competitors and capture a larger share of the market. These brands have embarked on their own campaigns to undercut prices and entice consumers with attractive deals. What role does the escalating price war play in shaping competition within China's EV industry? The intensification of the price war among major brands in the Chinese EV industry underscores the heightened competition and shifting dynamics within the market. As companies vie for consumer attention and market dominance, price has emerged as a pivotal factor, influencing purchasing decisions. While these price reductions may benefit consumers in the short term by driving down the cost of EV ownership, the long-term implications for industry profitability and sustainability remain to be seen. Nevertheless, one thing is clear: in the battle for supremacy in China's burgeoning EV market, price competitiveness reigns supreme. The landscape of China's electric vehicle market was significantly influenced by the entry of Tesla. Tesla's aggressive pricing strategies and innovative technologies ignited a price war among major brands in the Chinese EV industry. By introducing competitive pricing and cutting-edge features, Tesla challenged traditional players and spurred them to adapt to the evolving market dynamics. However, recent data indicates a downturn in Tesla's performance in China, with sales of its domestically manufactured vehicles declining by 19% in February. This decline highlights the increasing competition and challenges faced by Tesla in the highly competitive Chinese EV market. Despite its early success and popularity, Tesla now grapples with mounting pressure from both domestic and international competitors vying for a share of the market. Despite these challenges faced by individual players like Tesla, China's auto exports are experiencing a robust growth trajectory. In February alone, auto exports surged by an impressive 18%, signaling resilience and adaptability within the industry. Passenger cars emerged as the frontrunners in this export surge, with new energy vehicles, including electric vehicles, playing a significant role in driving export growth. What's the significance of new energy vehicles, like electric cars, in boosting China's auto exports? New energy vehicles, which include electric vehicles, accounted for more than a quarter of China's total auto exports, underscoring their increasing importance as a significant growth engine for struggling car makers. This surge in export demand for new energy vehicles reflects the global shift towards sustainable transportation solutions and the increasing recognition of China's prowess in EV manufacturing. Despite the challenges posed by intensifying competition and fluctuating market conditions, China's auto industry remains poised for growth, driven in large by the rising demand for electric vehicles, both domestically and internationally. As the industry continues to evolve and innovate, the role of new energy vehicles is expected to become even more prominent, shaping the future of transportation on a global scale. China's burgeoning auto export strength has not gone unnoticed on the international stage, triggering concerns and scrutiny from foreign authorities. In Europe, regulatory bodies have initiated investigations to determine whether Chinese electric vehicle makers are unfairly benefiting from state subsidies. The inquiry aims to assess whether subsidies provided by the Chinese government confer an unfair advantage to Chinese EV manufacturers, potentially distorting competition in the global market. This investigation underscores the growing importance of addressing trade imbalances and ensuring a level playing field for all players in the EV industry. Similarly, the United States has launched its own probe into potential security risks, all posed by Chinese-made vehicles. Amidst escalating geopolitical tensions and concerns over cybersecurity, U.S. authorities are scrutinizing the security implications of importing Chinese-manufactured vehicles. The investigation seeks to evaluate whether Chinese-made vehicles could potentially compromise national security or pose risks related to data privacy and surveillance. This scrutiny reflects broader concerns regarding the geopolitical implications of China's growing influence in the automotive sector and underscores the need for robust regulatory oversight. Despite these challenges and their complexities of navigating international trade dynamics, China's EV industry remains resilient and adaptable. Faced with domestic sales slowdowns and increased scrutiny from foreign authorities, Chinese EV manufacturers are leveraging their strengths in seizing global opportunities. By diversifying their market reach and expanding their presence in international markets, Chinese EV companies are mitigating the impact of domestic market fluctuations and capitalizing on the growing demand for electric vehicles worldwide. How does China's EV industry balance local issues with global prospects? As China's EV industry continues to evolve and mature, it faces a balancing act between addressing domestic challenges and harnessing global opportunities. The industry's ability to navigate through these rough waters will be crucial in shaping its future trajectory and solidifying its position as a key player in the global automotive landscape. By remaining vigilant, proactive, and responsive to changing market dynamics and regulatory environments, China's EV industry can overcome challenges and emerge stronger, driving forward the transition towards a sustainable and electrified future of transportation. As we wrap up, remember to stay informed about China's dynamic electric vehicle industry. Whether you're a consumer, investor, or enthusiast, keep an eye out on this evolving market. For more updates and insights, subscribe to our channel today and don't forget to hit the like button.